Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
The markets are set for some exciting movements today as we eagerly await the release of several important economic reports. First up, the Canadian unemployment rate will be released at 2:30 South African Standard Time, which is sure to create some volatility on our Canadian pairs. But that's not all. The US is also releasing their unemployment claims report at the same time, and the Canadian IVPMI will be released at 4 p.m. South African Standard Time. These reports are sure to create fantastic trading opportunities for our fundamental traders. But that's not the only exciting news. We are giving away a limited edition branded mug, and all you have to do is like this video, comment the answer to the following question. What is often referred to as bullion? A. Panicking markets. B. Rising markets. Or C. Precious metals. And make sure to subscribe to our channel. The giveaway will take place once we reach 300 subscribers, so make sure you check the T's and C's.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the dollar has advanced and recovered from 2-month lows hit in the previous session, as traders lightened their short positions to book profits ahead of the all-important US non-farm payroll report due tomorrow. The underlying trend, however, for the dollar remains tilted to the downside, and Wednesday's US private sector job numbers affirmed that. The jobs data supported the view that the Federal Reserve may not need to raise rates much further. Traders are now looking to tomorrow's non-farm payrolls report for March, with economists expecting new jobs of about 240,000. Let's dive into our analysis on GBP USD. The cable is expected to come back down for a retest on that primary support level. If we get a bounce on that support level, we could see this specific pair rally all the way back up to the next primary resistance at 1.26. However, if the support level is broken, we could experience a sell-off once again on that specific currency pair. Moving on to Wall Street. The S&P 500 dipped and the Nasdaq ended sharply lower after a growing wave of weak economic data deepened worries that the Federal Reserve's rapid interest rate hikes might tip the US economy into a recession. Nvidia dropped 2.1% and Tesla fell 3.7%, while Amazon and Apple declined more than 1%, pulling down the Nasdaq and reversing gains in some of Wall Street's most valuable companies in recent weeks. The S&P 500 declined 0.25% and the Nasdaq fell 1.07%, while the Dow Jones Industrial Average rose 0.24%. Let's shift our focus to the Nasdaq 100 analysis. US tech has broken through that diagonal support, and if we get a close below that 12,900 level, we could see a sell-off all the way back down to that next primary support at 12,700. However, if we break back above and get a close around that 13,000 level, this specific index could rally all the way back up to retest that level at 13,200. Moving on to commodities. Oil prices settled largely unchanged despite greater than expected drawdowns in US crude and fuel stockpiles, as the market weighed worsening economic prospects against expectation of US crude inventory declines and plans by OPEC Plus producers to reduce output. Brent crude futures settled up 0.1%, while WTI crude ended 0.1% lower. US crude inventories fell by 3.7 million barrels last week, about 1.5 million barrels more than forecasted, government data showed. Following the strong price rally this week, traders are a bit cautious on jumping in on a strong report. Looking at our analysis on crude oil, crude officially broke back down below resistance this morning. Should we get a close below that $78.80 a barrel level, we could see this specific commodity sell back to retest those lower levels. However, should we break back above this resistance once again, we could experience a rally all the way back up to $84 a barrel. Lastly, let's finish things off with gold. Bullion prices rose to the highest level since March 2022. The precious metals run-up could be linked to the broad US dollar weakness amid downbeat United States data and receding hawkish bets on the Federal Reserve's next move. Not to forget, downbeat US Treasury bond yields. However, the recession woes seem to have underpinned the gold price recovery amid mixed cues. Taking a look at our analysis on gold, the yellow metal is still trading within that channel of that larger flag pattern. We could potentially see a move back down today to that 2000 level to retest that primary support, from whereof we can gauge our trading opportunities again. Should that support be respected, we could see a buy back up to that higher part of the channel. If it is broken, we could see a sell-off back down to that lower part of the channel.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the peace be with you. Cheers.